Hey guys, hope you are all having a great day today. Today was a rather interesting day, especially for GameStop. We have a lot of small developments to talk about, and we absolutely need to talk about AI those last couple of minutes of trading for the stock. I have been searching for answers as to what that was because the price performance that the stock experienced during the last 30 minutes of open market trading were absolutely insane, and the subsequent massive dip that it had left a lot of clues and answers as to hedge funds' approach to dealing with GameStop. I want to announce that I will be releasing the next big video tomorrow. It will be serious DD for those looking to add some serious wrinkles, so be sure to be subscribed or follow me on Twitter so that you are alerted when the video drops. You will not want to miss this one, as it will give you a clearer oversight of some important things taking place in the market in relation to our beloved stocks. Before we begin, remember that I am not a financial advisor and that everything discussed on this channel are different topics and pieces of evidence that I find are important to better understand the current situation we find ourselves in regards to GameStop and AMC. Big shout out to all the Patreons and one-time donators. Your help has helped this channel become what it is and I am eternally grateful for it. Drop a like on the video if you find it useful, and let us dive right in. So, an important update from GameStop that I feel should have been discussed a lot more is that GameStop is expanding their social media online presence. They have decided to establish a new shop on Facebook. This development was brought to my attention through social media, as I personally do not use or have the Facebook app. However, this is a bigger deal than you think. Facebook as a company is expanding and slowly venturing into becoming a commerce giant. GameStop is taking advantage now, and by placing a shop on their website, they will now get to experience the best of both worlds, from both the networking that comes from having presence on social media to initiating on having serious presence on one of the biggest commerce websites in the world. I don't have any analytics on how this will impact sales, but it is a no-risk all-reward scenario. They can literally only benefit from this, and given the popularity and organic nature by which people are flocking to the stock, I expect this move to pay big time. The name GameStop is always floating around, from individual investors to trading groups and media outlets. This organic growth this company has seen explode this year will do marketing miracles for them. Feeling extremely bullish on this. This company literally announces great catalysts and developments every month, so do not sleep on GameStop. Now, something big is happening. S&P400 is replacing Weingarten Realty investors and adding GameStop. It is important to keep in mind that this is taking place prior to tomorrow's opening bell, which could very well be the reason as to why GameStop experienced a sudden bullish breakout close to the end of the normal trading hours today. However, I noticed something interesting when I also compared the price performance of the other stocks that were also added into the S&P 400. Both the Victoria's Secret and GXO Logistics stock performance has been extremely bullish. Since late July, Victoria's Secret has almost seen a 40% increase in stock value, while GXO has seen a 12% increase in stock value. We know these companies are nowhere near as popular, nor do they have the vast amount of buy order to sell order flow ratio that GameStop enjoys on a daily basis. For those that are new to the channel, GameStop consistently had over 4 times the amount of buy orders than sell orders. It is also one of the most traded stocks in the stock market. When we compare the performance of these two relatively unpopular stocks in comparison to GME, and noticed that from the same date in late July, GameStop is the only stock that has seen a decrease, seeing the price value drop almost 20%. To say there is something extremely off about this is an understatement. A disgusting amount of articles have also been coming out as of late bashing GME, which indicates to me that the media is procuring to get investors to sell the stock by instilling fear so that they themselves and their buddies quickly take advantage of a slight dip to buy some shares of GameStop at a discount. Now, I want to be realistic with you guys. Historically speaking, as I believed I had said before when the news broke out about the addition of GameStop into S&P 400, stocks typically experienced a dip in price during the transition process. However, this process of a dip should have taken place and ended in late July, close to when the announcement came out. As such, the current price dips are not to be attributed to the transitionary process. It is not a consequence of this that we are so far below in comparison to the other stocks. I do want to point out, however, that because the addition of the stock into the Midcap 400 is today, I can see how a bunch of index funds would have had the effect on that breakout we saw. However, that does not explain the immediate dip, especially in a single minute, that we encountered today. The way that the stock adjusted to the move in such a volatile way had eyebrows raised across all members watching it. To me, I believe hedge fund and friends to have set up algorithms ready to dip through a variety of tactics so as to quickly defeat surges. It would make sense to have those systems implemented. Someone with a big wallet, often called whales in the market, could come and buy a ton of GameStop. As such, shorters need to be prepared for this type of scenario because GameStop is incredibly volatile, and the moment it starts running it is very hard to restrain it. I strongly believe that GME is the stock that will set the squeeze. The reason for that is due to the variety of factors and fundamental pillars that make the stock what it is. It has a small float, the short position is incredibly bigger than anything else on the market, the buy pressure is substantially bigger too on the daily, with the stock consistently having over 4 to 10 times the amount of buy orders than sell orders. We know short positions on it have been happening for some time, and that bullish people started investing in this stock to cause a squeeze close to 2 years ago, meaning that they have had to be printing fake shares for a long time. Now, before I get the massive hate I know I will get on the comments, do not freak out and hear me out first. What I am saying is that I think GME is the one to set off the mother of all squeezes, and that other meme stocks will follow. AMC is, as I have seen, the second biggest shorted stock out there. Its massive appeal on social media has brought millions of investors ready to buy and hold. Both stocks are incredibly similar in how they behave, which has implied to me that the same algorithm that controls and manipulates GME is the same one that manipulates AMC. As such, anyone that says one or the other will not squeeze is outright lying or incredibly ignorant as to the matters that are happening. Both GME and AMC are going to the moon, and I personally think there are other stocks in the market that might squeeze as well based on what I have seen. However, nothing at all will compare to the squeeze price these two monsters will get. I abide by what I have been preaching for months. I say that you should buy whatever stock you prefer more. If you like AMC more, buy it, and if GME appears to you more, then buy that one. Both will have thunderous runs once things get going, and I cannot wait for that day. I always say, this channel's purpose is to simply disclose information I come across as important for you guys to know, but the decision is yours. Look at the facts, look at the data, and do as you see best for yourself. Don't let anyone bully you into one stock. Be open-minded, be humble, and learn and share as much as you can. Buy whatever you like and feel comfortable. I personally am raising my GME vault at the moment since the price has dipped enough so that I can comfortably think this is a great place to start adding. I believe I have a healthy balance that is to my liking between both. Stay bullish, stay informed, and buy to hold. The Fed reported that reverse repo operations for today resulted in over $909 billion. Though less than the $1 trillion mark we reached last Friday, these numbers are still insane. AMC's dark pool transactions accounted for 65% of the total volume, while GameStop dark pool transactions accounted for 45% of the total volume today. According to Fidelity data, buy order flow for AMC was twice as big as the sell order flow, with GameStop's buy order flow being over 7 times bigger than the sell flow. Now, let us finish up with a recap today's performance. AMC traded bearishly once again, with the stock falling almost % today. It had a relatively neutral performance in the pre-market, running horizontally for most of the day. Close to market opening, the stock started falling, and once the markets opened, AMC had a big fall. The stock experienced a bit of a volatility, testing the resistance and support walls multiple times before breaking that important support and falling back to 32.78. The stock then started bouncing and entered a bullish wedge pattern. However, the stock once again broke support and traded sideways for the most part in between 33 and 33.50. AMC then enjoyed much-needed momentum as it shadows the rise that GME experienced. For those still arguing against the relationship of these stocks, how much evidence do you need? AMC closed at 33.59, right on the VWAP. It will be interesting to see if this sudden rise by GME will help AMC catch a break and perhaps bounce back up a bit. Either way, today was a great day to buy some tendies at a discount. Like I said, shorters want AMC to be below $30 by Friday, and so far everything that we have seen has proven that to be their goal. Let's hope for a bounce back and consolidation on top above 35. Regardless, be prepared for anything, hope for the best and expect the worst. Now, GameStop's recap is going to be fast because, as you can see from the graph, almost nothing happened. GME opened to a massive dip that brought it down. It experienced volatility all the way until it reached 148.20, which was the day's lowest price. The stock then entered a channel where it traded towards the resistance line for most of the time it was on the channel. The stock was then met by a small attack that brought it reeling down to 149. However, it was then met with a huge surge and breakout, running to 159.89 with no problem in the last couple of minutes right before we closed. As we discussed, this could be mostly attributed to the transition process to the S&P 400 Midcap. What is worthy of note here is the manner by which it dipped. In a single minute, an attack managed to undo almost everything it had gained. GME closed at 152.75, right about where the VWAP is. Again, I think this could help the stock bounce up a little bit, but anything can happen, so don't cross fingers yet. And with that, I want to thank you guys so much for your continued support and love. Drop a like if you liked the video and let me know what you think below. Do you plan on buying more AMC or GME this week, or are you hoping for a greater dip in the future to then comfortably buy some more? Let me know all your thoughts and worries in the comments and I will attempt to respond to most. Big shout out to all the Patreons and one-time donators, whose contributions have carried this channel to new horizons. Links will be in the description if you want to help support the channel. Remember to follow me on Twitter if you haven't already, and I hope to see you guys on the next one tomorrow. To the moon.